The markets have taken a hit, but it doesn't look like it'll be the start of the bear market. And it's possibly a strong end to the month. We asked Gary Glover why he thinks this is the way and what he's looking to trade. Good morning, Gary. How are you?
Oh, good, Chris. Yeah, pretty volatile there. Some big moves. Obviously, Nikkei biggest move ever. It's always, yeah. So we were just talking about one of the day traders we've followed. How I did notice that he was, obviously with that capitulation yesterday, there he was, trading some, buying some of the capitulation sort of stuff there. So buying some Nikkei futures, I think NASDAQ futures and S&P, and then buying some of the stocks in aftermarket because they were getting hammered pretty hard there. So like Apple was one which was down around 190 in its futures there, but then obviously bounced after got carded and then bounced sort of below there. So yeah, look, it is. I think it's just going to be a bit of a short-term pullback there. I mean, look, you do got to be a little bit wary. Just in high inflationary periods, we've definitely had some bigger moves. Volatility is, but you generally larger sort of stay that. You have volatility in the short term, but it can sort of stay flat here longer term. But this, the election year, so you normally only sort of see sort of small corrections there. So around that 8% is that's usually the largest you'll see in election years. So yeah, I mean, there can always be something different here, Chris, but I just see it as a bit of a short term, capitulation now is really, I mean, I think the market was 2 weeks ago, we're pretty buoyant, thinking the Fed's going to cut rates soon, going to be a soft landing, and then it's almost overnight we're heading for a recession. So it just changes so fast. But yes, I think it's just probably overreacted here, I think, in some regard there. But it's funny, that 60-year cycle, that sort of topped in that sort of late mid sort of July pullback there, does come back into sort of early August. 60-year cycle just came back and sat on top of the previous high. So we have probably just overshot that a bit. So maybe we come back a little slightly deeper here. It's a bit of a nothing level where we've come back to on the NASDAQ and S&P. So we have broken below that previous swing high. But we've sort of probably come back closer to the old high there. So going back to the 21 highs and stuff there. So, it might be interesting to sort of see how it all, just see where we finish up by the end of this week here. I mean, we've got Nikkei's had its biggest ever down day in history of its market, and then it's up 7.5% futures. So it might have this long tail here eventually, at the end here. So, look, it's pretty choppy up there. Makes it a bit hard to trade there. I've sort of definitely been stopped out a few things on the pullback here. But yeah, had been buying a few ones as well. So, I thought those stocks sort of held up best there, but yeah, we shouldn't really get I don't think it's a bear market, Chris. I think we're just having this little bit of a breather here. The fact that it's happened so fast and it's so happened so quickly, and even just a bounce back here in the Nikkei futures as well. And I see, I was quite surprised yesterday to see the NASDAQ or 800. We were just talking, earlier I did buy a little bit of NAS late just because I felt like, with the futures already down 800 points, it was going to be hard to be a loser up the next day, and we'd have to be down more than that. Talking about
historically, it's fat tails. That's right.
Yeah. Yes. I mean, the Dow used to have those 800 point nights, used to be the big ones. Obviously now it's getting bigger, so it's sort of had that thousands. That's about as big as it can get there. So, but yeah, so I probably think we'll probably see a bit of a snapback here, to be honest with you. Yeah, so just, I guess it makes it hard there. So I guess probably just, for those sort of traders out there, probably, travel light here, trade light, give yourself a bit of room. You probably need to just, if you trade smaller, then you can give yourself a bit more room on the stock. But, for investors, there's probably some opportunities there. So definitely a few funds that I'd sort of missed buying for clients. Definitely got pulled back in the last couple of days. So sort of, nice to see some of those getting topped up there for kind of longer term investors as well.
Nice. Well, that's definitely opportunities on the market. you've talked to NASDAQ, you're talking about the highs that we're sitting on. A little bit different with the S&P. So we've breached this more recent high, and there's a bit of no man's land in between, what was it, 2021, 2022 high to the recent high we had March.
Yeah.
Would it be a low that you'd look for, or is there any, there's not really a fib level in there either? Where do you see any gravity coming in here?
Yeah, I don't think it exceeds the last swing low there. So around that 5,000 mark there. So I think it'll pull up, I mean, if this is sort of going to continue into the end of the year, I mean, normally they just come back, sit on top of the previous high and go again. So the fact that we've broken below that old high, that'll take some of the gusto out of the market. So we can still sort of go up here, but, maybe we do like an overlapping top there, which means that, because we've come back, like if a strong market there, you want to sort of sit on top and then build from there, and then it can sort of really you can still keep going pretty hard here. But once you sort of break below that old high there, you can still keep going higher there, but it just means that maybe it's going to lose a bit of momentum. So this means maybe the next sort of couple of legs, we might go up another drive, maybe marginally higher, then pull back in the range again, and maybe go higher again. So that, to be honest, that'll be a nice looking top here for the end of the year if we got like a little 3 thrust overlapping peak there. So something to mess with. Webster markets had a pretty good run here, taking a bit of a hit here as well. So this might mean the momentum comes out of the market there as well, Chris, as well. So so I think you'll see a bit of a bounce there, but maybe this is going to be a bit of a grind up, go marginally higher, pull back again, or they grind up, and then but don't get too far ahead of ourselves. But it is one sign of weakness there that we have broken below that previous high there. So All
right, so that's S&P. Similar, but still a little bit different in the nuances of how it unfolds and looks for the rest of the year. The Aussie market, obviously, we're very different. We have the heavy resources. You have been keen for the resources to step in with the property and the healthcare and do a bit of the heavy lifting as the transition happens. We do know you've been sort of bearish on the banks for a little while. Turned out pretty well, especially in the last couple of days that they've been hit hard on those historically high valuations. Comm Bank yields were below 3.5%. I don't think I've seen that in my career, except when they had to be wound back from COVID a little bit. Look at the numbers, but how do you see it happening here on the Aussie? Because we had this really high tail. Is that like an evening star, is it? And then just getting belted down to where we are today. What's the interpretation now?
Yeah, I thought we'd probably just come back to the break zone there, but obviously we've come further in here. So it'd probably come back down to at least the bottom of that range there. But, maybe that the old, if you look at that red channel there, that's probably going to be that's probably sort of support there. So come back to the old breakout zone, because that's really probably, if you look at our weekly, monthly, that's definitely, most significant there. Just wouldn't have thought we'd come back so much there. Sort of, particularly when you sort of see, the clear sort of signs of buying the dip there. But I guess that was just the fact that all the other markets were pretty buying as well. But it's had a decent pullback there. But I probably think maybe the top of that band there. So I don't think we're too far away from that, to be honest with Chris, as well. So probably don't see it coming too much below 7.6 here. So I think it's I think you're likely to probably see some sort of recovery here.
Okay, so with the possible recovery in the cards, the S&P 500, the last one to talk through the indices is the Dow Jones. You were talking before about the times where we used to see 800-point falls on the Dow, and we wake up and be quite concerned. That's what the market have been hit. What are we in for? It's possibly out to 1,000 because, well, the numbers have just increased over the years. But different sort of chart. Where would you sort of see the gravity coming to for this chart?
Yeah, I think probably, to be honest, I think the sort of bottom of that range there, so I don't think it's going to be too deep here. I know it looks like a bit of an overlapping top there, which is a bit negative, but I still sort of think the cycle is still relatively, positive there. And if you look at that left-hand side there, Chris, back in 2021 there, it might just do something like that. So we might go through a long extended period sort of grinding higher there, but overlapping as well. So that could be sort of something we might see here. So, yeah, good. Just make it a bit messy for a while. But yeah, have to identify our opportunities sort of clearly, I guess. So yeah.
Okay, so messy times ahead. Although it's still a bit of an outlook with that 60-year cycle, a 4-year presidential cycle, still indicating we could have a decent move towards the end of the month, or at least maintain these congestion periods that you're talking about, and maybe even positive towards year end. Election cycles tend to indicate that.
You'll normally sort of see there, when the market falls like this pretty hard, you can see like a little bit of a snapback, and then I'd say 8 times out of 10 you'll come back and retest that zone. So you'll either come back and make a high low, or maybe we'll make a little false break. It's not more than likely probably a high low. I think even the 60-year cycle came down to, I think, sort of early August, bounced, then came back and retested, made a high low, and then sort of built there from late August. So I think by the, just because the market has been pretty dramatic, some pretty big moves in pretty quick time here. So I think you see a little bit of a snap back, but then you probably come back, it's a pretty high probability to come back and retest that low for a second shot here. So there'll be people, we get a bit of a, we do get a snap back here. What will happen, Chris, is the normal, the retail mindset is, it's a bounce. So it's got away from me, and that's after it's already jumped, 5% or something. Then that's when retail money often will chase that, and then that's when you get a retest back here. So just be careful, enter small here, tight, still have stops in plain stuff things. So just be cautious there, but it's highly likely we'll kind of get a retest there. We talked about some technical patterns where you get 1 and 2. So when you get a move like this, I'd say 8 and 10 will come back and make after such a sort of hard, fast move there. Because those banks there, if you look at the banks there, when they've come off like this hard in the past, they normally come off really hard, and then they try and bounce, and they sort of do a little bit of a, say a dead cat bounce, but you might just get a sideways grind, and then you go back to the next test as well. So you always get a retest of that low there. So more than likely the banks there, this has been a pretty big hit, bit of a touch up. So when they come off this hard, they'll probably go, they'll try and rally for 2 weeks, go do a bit of a sideways sort of churn, and then they should roll up, have another leg. So it should be an ABC in there. It's sort of what you're looking for there. I think we had one there not so long ago there on the banks there. I was just trying to.
Is that February, March, or March, April? That kind of.
Yeah, even sort of even in March there we saw. I think it rolled off about 5 or 6 days quite aggressively. It rallied for 2 weeks, and then it rolled off again for 2 or 3 weeks, and made an ABC then as well. So just they come off this hard off the top here, big volume there. Usually without something there, but it probably just needs to it's come off pretty aggressively there, so it probably just needs to churn a bit of time here. But the banks are so overvalued here. It's just crazy. I've never seen anything like that. In 20 years, I've been doing this 20 years. I've never seen Comm Bank trade anywhere near that, and it's had stronger earnings growth in the past. Where at the moment
that part gets me right when you first started talking about that months ago, saying their forecast to fall, their earnings are falling 3%, but their PEs are at historical high levels. You've got to dust off the textbook and say, I missed that chapter.
Yeah, and I think when they had the fund management sort of business there, I think they had like return on equity around 16% there for about an 8-year period there. But they were growing at sort of 8-10% earnings per share growth, so they're growing quite strongly each year. But yeah, there's no growth forecast here. We're trading on a multiple way, way beyond. So yeah, people come up with all sorts of excuses as to why it should be trading there, but that's, it's that doesn't work out in the end. Trust me. So you're trying to find reasons as to why it should stay here.
That sounds like the book this time is different, which is sort of came out of the GFC, but they look back in time and all the other times it was different until it wasn't.
Yeah. What's the quote there? This
markets can remain.
More money is lost on that statement than any other statement. It's different this time. Yeah.
Yes. Yeah, but it is because there's new technology or there's new valuations or the market's changed. It has until it. Oh no, it hasn't. So on that technical component, we've seen the ABC that you've highlighted in Comm Bank. Is there anything else you're looking at? Like sometimes you want to talk through a bit more of the time cycles, or is it really just the heavy hit that we've seen, the high valuations that you're looking at for Comm Bank?
Yeah, I thought probably in terms of sort of cooling off here, I thought, might come back to the old high there around that 122 zone. That might be an area where you might see a little bit of a bounce there. But I think ultimately it'll probably come back to that 110, 112 there. So as much as I think it's still overvalued there, Chris, I just noticed the markets take a while to adjust as well. It won't sort of get back to that, probably 17.5 times or 17 times earnings for a while. So you get a bit of a hit, something pretty impulsive like we've got first leg down. So that's a bit of a clear sign to me. When you see that really aggressive, impulsive move, that's a warning, not a warning shot, but that's a clear intent there. So we'll see a bit of a bounce there, probably come back a bit lower, but then we'll probably bounce after that, maybe come back to that midpoint. And I think basically, I probably don't think we'll return back to the sort of 17.5 times until probably next year. So I think we'll probably pull back here over the next few months, then probably bounce into the middle of the, into the end of the year with the rest of the market. But then probably next year we probably see a return back to more normal valuations there. But this doesn't happen just, all at once there. I think, it's normally a bit of a tiered approach there.
Well, there's definitely a lot of funds being the largest company on the ASX, depending on, I haven't read other numbers in the last few days. But they did overtake BHP, which does mean that it was about $100 invested into the ASX200, about $12 was going to Comm Bank. So if we've got a lot of passive investors, ETFs, and the super funds themselves dialed into the market, it means there's a lot of capital deployed into Comm Bank. They don't move their portfolios too quickly, those investors. But you're talking about valuations. At the other side of the coin, Rio Tinto and BHP are looking better than the banks from a relative valuation performance. Obviously, it's a function of what's happening in the commodity markets. But you've got ABC on this chart, and you've got the weekly chart for Rio. So, false break, what are we looking for here?
Yeah, we just got, obviously that ABC, that sort of three-way correction that's the most common, pullback you see in markets all the time there. And in a range-bound sort of high inflation market, that's sort of something we've seen a lot recently. So you're looking for that, we combine that with a bit of the false break here. That's a good setup there. And we're seeing definitely a clear sign of volume pick up around that low as well. So we're definitely seeing some signs of accumulation there. So that's two good signs. Even the last couple of days of the market getting huddled here, these stocks have been holding up pretty well. So that's probably a good sign as well. So so I know it's BHP and Rio definitely sort of holding up quite well. Even Mineral Resources has sort of held up okay. So this looked pretty interesting there. So that, they will need to hold up there for our market to keep its head above water here and not come back too far, because obviously those banks are pretty expensive there. So definitely need some other sectors to sort of hold up there. And we were talking earlier about, definitely property and healthcare were the two other sectors which has been showing a bit of strength there in the last few weeks. So even this week, obviously, talking property, those property stocks are still holding. They're still showing a bit of strength as well. So that's a good sign there. So that's, we want to sort of see what stocks, what sectors hold up best when the market does pull back, because when we look forward, they're always the sectors that tend to outperform coming out of those sort of deeper type lows there. So it does look like property is definitely an area we should be looking at pretty closely.
I'm pretty keen to see what you make of the list and your the charts you pull out of the list on Friday. But getting ahead of themselves, I was keen on that yesterday. So looking forward to that for Friday. But you mentioned Mineral Resources already. So false break here, relative performance against the market, particularly yesterday, well, relatively better than some of the banks. So that's a heavy fall into this false break. Is there a volume marker or something that sort of helps give you confidence, or that you look for, or you want to see it create?
Yeah, I used to get sort of scared when I see sort of volume sort of sell off, go back and sharp retest like that. But I've seen quite a few over the years there where there's one then Aristocrat came back pretty aggressively there and thought, that looks too aggressive. So I didn't trade the false break, and of course it flipped back and then it bounces super aggressively. But so just, it goes to show, it's sort of like you just got to look for those sort of classic setups there. So I know some volume has been elevated for the last 2 weeks here, and it does tend to be sort of trending here just above that sort of $61 mark here. So it does need to sort of show a bit more, but I do like the fact that with the market under a lot of pressure here in the last few days, it has held up pretty well. So still got a bit to do. I know PLS was one of the stocks that held up. I think it was one of the few stocks that was positive yesterday, even though it was only up a cent. It got 1 or 2 cents, nothing dramatic, but it's a good sign that they hold up, So, yeah.
I went through the list of the ASX200 after lunch yesterday. I think it was about 8 that were positive. PLS was one of them, though.
Yes, yeah. Yeah, so it's just interesting they've hung on here. So it's good signs for that. Just need a little bit more, sort of size confirmation there. But yeah, hopefully the whole thing can tighten up, maybe give us a little coil and give us a little something sort of tradable there. But yeah, some good signs there.
Well, sticking with the miners, but at different speed, we've got lithium exposure, Liontown Resources, which is one that was a phenomenal leader throughout the 2021-2022 battery minerals drive. Much down from the highs of 320, but we got FB here again. So as you're looking for something similar, a bit of a coil, show a bit of stability, it fell out like mineral resources, strong correlation with some of their tailwinds, economic tailwinds. Would you be looking for something similar?
Yes, we've had nice volume at the low there. It's almost the exhaustion into that low, and then a bit of a recovery there. Haven't seen the big bounce there, but maybe sometimes it does a bit of work here. But the only thing to mindful is there, some of the ones that have been hovering around, not going too far, have tended to break down again. So just got to keep that in mind here. But yeah, it's interesting here. This one's sort of held up here. It is one of the lower, I think, Liontown and PLS have both sort of come out. And Charlotte, they're still profitable even with really low, sort of lithium. Yeah, sort of main prices there. So they are going to be they're the low cost producers there. So, and we're seeing quite a few other little players already go into maintenance mode as well. So that's what should happen there, where the prices are really low. You can see those sort of higher cost ones just basically, go into care and maintenance there. And what that does is just basically it brings less supply on, and then then hopefully over time the prices will recover and come back here. So definitely started to see that. Maybe we're a little bit early here, Chris, but definitely signs of the sort of activity you see at these lows is there. And I guess Liontown and PLS are probably the two to keep an eye on there. I think mineral resources having that. It's got lithium, iron ore, and mining services, so it is a bit more diversified there. A couple of those sectors are still pretty buoyant. So, so I just thought it was pretty interesting, that sort of sector there, what's happening there. So, it's one to keep an eye on here, really. Yeah.
Well, we will watch that, and as you said, be careful to see if they don't drop out the bottom. But if they do and they hold form, that can be where the next leaders spring from. Changing gears, but sticking with a leader that was over that same period for a completely different reason, Temple & Webster, that was absolutely powering throughout the COVID years, has trawled out a bit of a bottom. Surprisingly, it's rallied back up, got to $13. But before the market started rolling back just recently, they'd started to roll over months earlier into this channel that you've highlighted. And interestingly enough, they look like they have relative outperformance in the last couple of weeks. So what's Temple & Webster got to do to really excite you for a trade?
Yeah, so we have sort of broken that downward channel there, which is interesting now. Obviously, in a pretty weak tape, that's definitely showing some relative strength there. Not showing a lot of volume so far, Chris, in that sort of coming out of that low here. So that's probably less compelling there. But maybe we're going to build a bit of a base here. So we probably want to see something like maybe a series of sort of high lows here build first. But yeah, definitely one to sort of keep an eye on there, just because it has had a pretty decent pullback, and it has sort of broken out of that sort of downward channel there. So just probably needs to sort of tighten up there, maybe crawl it up again as well. But yeah, definitely one to sort of be keeping an eye on there. We were just commenting earlier that some of the retail stocks actually have held up pretty well, so surprisingly well here. So yeah.
Could this be a candidate a bit early to call, but on the long term, if you're getting a bit of a cup, if it holds and falls well, would that be a cup and handle candidate?
Yeah, possibly there. I think Nick Scully was the other one I saw on the daily, something like had something similar as well. So But yeah, there's sort of, it's just normally not a sector that has those sort of cover handle. That's the only, that's the pullback there. But yeah, it is. Yeah, it's interesting there because there has, if you look at that sort of rally there, the rally's been a pretty robust volume up to the top there. This pullback there has been a lot. As much as we're not seeing much volume on the bounce here, the pullback's pretty light volume all the way through there. Yeah, so that's it's not too much. No, we wouldn't say there's aggressive selling in there. So that's sort of good longer term here. So I just think we need to sort of see a little bit more volume. On some sort of consolidation here, just just to show a bit more positivity there. But yeah, just one to sort of watch here at the moment.
Okay, well, we've still got Tyro on the list. In this week's report, you've put Tyro Payments, TYR, the ticker. It has had that massive dropout, and then it's spent a lot of time in this section of the chart. So yeah,
overlapping corrective trends. So it's not a strong trend because it sort of keeps overlapping there. But even the last thing on the chart there, we've had a bit of a bounce there. There was some pretty decent volume in that bounce there, particularly if you drill into the daily. And then we pull back here on pretty light volume, and really only the last week here, we've seen a little bit of volume come in to the low. So it does have the appearance of a little bit of a VCP on the daily, but this market might throw that out. But interesting, if we can hold here, I think if it holds here this week here, definitely want to keep an eye on that because we've definitely seen some of those other names in that area show some strength. So and then I think Tyro business is doing quite well there. So I noticed they've actually introduced one of those. I think they've first introduced that application there where you can now sort of split the bill. Saying that a lot of retailers, you could someone's got to pick the whole lot up or transfer it in there. Whereas now they actually, and it's funny, on the weekend actually I didn't use that, and I thought it's interesting because obviously you split the bill and everyone puts their own tip on there, so you might put pressure on each other to the tip
and match the tips.
Yeah,
right.
Yeah, but everyone had to do their own sort of tip there. So yeah, so it's probably a nice application there, but yes, still got to prove itself here. But I just definitely want to keep an eye on here as well. I think if it does sort of tighten up a bit more here and start to see some volume on the upside there, definitely one to have a look at here. But just a little bit early at the stage, but do like the signs there.
Nice. Well, also on the chart, on the report, you've got Charter Hall. So we've talked about the property space being relative performance, outperformers, relative strength, Launchpad showing up a lot in the list. And yesterday they seem to be, less volatile than the rest of the market.
Yeah.
So Charter Hall, obviously hitting the lows back here October a year ago and then coming up a little bit higher. What's the interesting component of this chart and what's caught your eye?
Yeah, again, sort of had that sort of corrective decline there. Again, the classic three-wave sort of ABC pullback. Then we've seen some good volume on this last rally, Chris. And then we've actually sort of broken out of that little consolidation range as well. So, yeah, just some good some signs there. We're definitely showing strength there in a pretty weak market as well. So, yeah, it's funny. I did have a look at some of the, I know you sort of talk about property being some of the stronger names. I've sort of noticed that as well. But I've noticed that some of them are setting up like a larger BCP. So I've had that really strong bounce, and they've pulled back pretty deep. And they've gone back to bounce again back up near the high, and then they've pulled back a little bit, but tightened up here. So probably I'd like to see a tighter VCP normally, but I'm seeing some of the big caps set up that way recently. So, but yeah, I think that looks pretty interesting to me, some of those names. So, yeah, the sector that a lot of people don't like trading. And when the markets get nervous, they tend to avoid that sort of sector. But, I saw some of the best traders that I follow have been eyeing off that sector and been trading that sector. So, yeah, it's good enough for them. It should be good enough for us.
Well, I know that we've talked about it before, and quite often with the Australian property trusts, and we do have a large number of property trusts on our market relative to the rest of our market, and they can be quite sedate in their percentage returns. If you're looking at a 3-to-1 risk to reward, you might have 3% downside and 9% or 10% upside on a property trust. But if you're trading a lithium miner, you might have 10% downside, 40 or 50% upside. So would you look at adjusting how you deploy your capital in this kind of market with the volatility that we've had in the last few days? Keeping that in mind, would that adjust how you deploy capital?
And I think we're still gonna trade those sort of stronger names there, Chris, as well. So yeah, I do tend to get drawn to some of the index plays there, because then it's sort of like, if you think the market's had a pretty deep pullback there, and then it's easier to buy something on the index front there. So like if I saw the NASDAQ come pretty back deeply, or the S&P come back, or even the XJO, I might trade one of those leverage ones as well, just find them a bit cleaner there. Particularly if we see something really deep and aggressive sort of sell off there, because they're the ones that can snap back and bounce there, and then you're not having to pick the eyes out of the stocks there and stuff. Then if you get caught in the wrong sector as well, but yeah, it's there should be some clear names that sort of do hold up here. We're kind of in the middle of reporting season as well, Chris, as well. So you've got to keep that, keep those names on your list as well, what's coming up here. So there's a few on my list there that I've sort of been watching there that I think are on, one of the things I do look for in reporting season, I look for stocks that I think are oversold fundamentally. And then what I want to see is when they come out here, a bit like a Credit Corp there. Credit Corp is pretty cheap, but everyone was worried about it. And then it comes out and it's not so bad. It's actually pretty solid. And that's the kind of thing I'm looking for. So looking for stocks that are probably, I think, are oversold here. The market is actually nervous about coming into reporting season, and then seeing a report actually which is actually not too bad, or sort of almost bearing the worst there, so to speak. Here. So yeah, that's the thing I do find in reporting season can present some good opportunities there, because then you can get some nice moves out of those as well.
Nice. Well, that's a good way to look at into the reporting season. Also, the momentum leaders, the relative performance, and trading the indices with smoother and cleaner. At that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
On the right, we're going to put over there the playlist from Friday where Gary looks at the top momentum companies, the launchpad leaders, and so forth.